Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Friday, May 21st, 2021. I'll start out as I usually do with a quick update on the indexes. Nothing much new since yesterday's updates. I do want to roll into gold, commodities, and the US dollar, and anything else that stands out. But let's just start here. I'm going to remove these trend lines. Remember, I had given you what I had called potential trend lines because I had two reactions. One right here at the top and one there. And I always say that I like to see at least three distinct reactions to validate a trend line because any 2 points can be connected at random. So what happened here? We hit that target. I mentioned that as a resistance level, objective shorting level, but we went right on through it as if it wasn't there. Not any type of reaction whatsoever. Not even a consolidation. And so at this point, I'm going to remove that trend line since it's not to me a valid trend line. And then where we're at, as I mentioned yesterday, it certainly doesn't help the bearish case. And at this point, you might want to hold off on adding shorts. I like to add on these bounce target zones. As I said, I'm still giving my swing positions room based on what's going on in the daily charts. Up until last, pretty much today or yesterday, we've been threading the needle on this one. The market's turned down at every bounce target zone that I've mentioned, providing multiple, quick shorting ops. But this one, most recently we're down here. I gave you two bounce target zones, and we've exceeded the second. We're still well above that first target zone here, and we're still in, we'll call it correction territory. The technical definition of a correction is a drop of 10% or more off the highs, and we're only down. We dropped about 7.8. But again, based on what I see on the daily chart, that's fine. They don't all play out perfectly. They don't all stop at every key retracement level. In fact, let's look at that because I mentioned I didn't even check that. And since I last updated, let's just see where we're at on the Fibonacci retracements. Wouldn't surprise me if we came up to a key level. Yeah, right there. We just hit what I started here at the most recent high, down to the lows, right there, that candle, that was our low. And so far, this bounce has taken the cues up to that 50% typical run-of-the-mill, counter trend bounce, 50% Fibonacci retracement level there, with the 61.8 right here, and that would be closer to that top of that previous bounce target zone. So that's where we're at on the cues. Let's not spend much more time on that. We'll see how today. I don't think we're going to have any resolution. Whether this market, whether the market rallies significantly into the close today, it would have to do a whole lot to change anything on the, especially on the daily time frames. And if it turns down, it's got a pretty far drop to get to the recent lows, and that's where I really need to see the next sell signal. With a high probability that we're going much lower. We need to break those recent lows from this week and last, and that's it. So nothing much will change today, and I probably won't, because of that, probably won't do an update. I've done extensive updates in the market. Here's a SPY running at the 50, almost to the 78.6 fib retracement, and let me give you my main chart here. Right back to the top of the previous bounce target zone there. That was, remember, our first bounce target zone. We hit that key 410.39 support bounce, hit it, fell down, hit the top of the zone, down, back to the top. And this is what we've got now, this kind of choppy action. And again, right now, whereas before my focus was on the tech-heavy NASDAQ 100, and we got a lot of sell signals and a decent correction there, I'm really eyeing the S&P 500. And then to dig down in there, as mentioned recently, I'm watching some of these key sectors like the healthcare stocks, second largest sector, still above trend. The financials, right there, hang in there. Look at that, stick save. That's what you call stick save. We intraday on Wednesday, we were down below there. See that little shadow of the candlestick, skinny part. Managed to rally back, close on the trend line, back on the trend line, and that's it. So, like I said, unless the financials break down, solid break of the primary trend line, you're not going to go much lower. You just can't. It's mathematics, and it's also how the market works. XLC gave us a little whipsaw the other day on Wednesday, moving down below the trend line, but you can see it was a green candle. That means we rallied to close right back on it. So actually another stick save. I'm stand corrected, not a whipsaw on the daily time frame at least. It was an intraday break, but again we closed back on the trend line. That BOD, the benefit of the doubt trend line, I gave you the yellow one, and back above it. So those are the things I'm watching, and Well, uh, nothing will happen this week, and that's why I probably won't do an update on the markets tonight. If I see anything else that stands out, I will. Now let's talk about near-term stuff. I want to talk about gold and silver. As I mentioned, they're getting. It's been a nice run, very profitable run since these two major, objective long entries back here and here. Solid uptrend, but as I mentioned, we have negative divergence, and I want to show you something on the dollar. I've updated that yesterday. There's our divergence, continues to build at that most recent high. This is the trend line to watch right here. Minor trend line, but I think if and when that breaks, and it's likely too soon, and so here's some considerations. If you're a very active trader, you can put a stop below there. You can even short gold at minimum. I think we come back bare minimum to that 1845 and quite likely to this target. So if nothing else, again, like I said yesterday, you just might not want to be adding to gold or taking a new position now. I prefer to wait and see, get a pullback, and we could probably pull back and visit this uptrend line right here that comes off the late March lows. So there's your potential pullback targets, and there's plenty of support below and a big level there about 1798. We'll call it 1800. And silver, these are the futures. You can try to align this chart with gold, GLD, the ETF, if that's what you're trading, but you're going to have more reactions here. So that's why I like to use these charts. You can identify a lot more reactions and put in trend lines you just can't put on GLD, which is only trading 9:30 to 4 p.m. But yet gold trades around the clock, around the world. It's one of the most widely held assets there is. Okay, next up, silver. Same thing. Well, actually, silver already hit that trend line. So I think I gave this to you yesterday and told you, look, that was a potential pullback target. So we took out the minor trend line, and silver's there. Now, silver could actually break this if we get more downside in gold. And let me show you why we might. Again, yesterday I spent time covering the charts of the EUR USD, Euro US dollar. And I'll just cover the futures now for you futures traders. These are Euro futures. E7 is the symbol. And we have, this is a 60-minute time frame. There's a trend line that we'll probably come back to. Almost a very, very high correlation between the euro and gold. Why? Because the euro is the biggest component of the dollar index at 50, I think it's 57.6% weighting. So by far the largest. It's almost an inverse of the dollar because of that. And so gold's going to move with it, and so the trend lines probably come in roughly together. And look, if the trend line breaks, there could be more downside, but I still think we'll probably come back there at least. And look, this is a potential swing target. So if you want to short the euro right now, and here's the thing too, gold has been in a strong uptrend, as are commodities, and I'm not super keen about shorting it. I may even take a short and just trail a stop down, don't get me wrong, but if you're not a nimble trader or a very active trader, you're a long-term investor, all I'm looking for at this point in time is a bounce in the dollar, pull back in the euro, and that is likely to put pressure on gold, and there would be your potential swing target. Call it a zone there. That's about 120 roughly on the Euro E7 futures, with one more spot here. Let me give you another place we're likely to have a reaction, another potential target I just saw. 120.67 right there. Okay, so that's what the euro looks like. And now, of course, the US dollar index, DX or dollar futures. This is a 6-month chart, so these are 2-hour candles. And let me show you the big picture here. So first and foremost, we have a lot of reactions right here. See this number, 89,659, major reaction low right there. We briefly went below it, but that proved to be a bear trap or a whipsaw signal, because we regained it, and then boom, a powerful run up all the way up to here. And even once along the way, we back tested it. We hit it again. We hit it again. That is support. There's no guarantee that support will hold, but based on what I'm seeing in the charts, nice positive divergence right there. I like to look for these divergent lows like we had right here, had right here, and we have right here. So this indicates a high probability of a bounce, a rally in the dollar, and based on the divergences, and we're coming off major support, you can go long here, or wait for breakout of the trend line, and this would be my bounce target zone. Let me move that line. I'm going to leave that line I have there. I'm going to add one more. And when I put a lot of resistance levels in close proximity, it's more of a bounce target zone. I'm favoring right here move up to that 91,420 level I just added, and I'll leave this line here. And that would be a pretty decent spike in the dollar. Not to say it couldn't go more, and nor am I guaranteeing it's going to get there, but that's where I think we're going in the next week or so here in the dollar. A couple weeks, we'll see how it plays out. You know, if it goes the other way, as I always say, support is support until unless broken. If we break it and it's anything more than a whipsaw and these divergences get burned through, we're going lower. I'm still longer term bearish on the dollar. I'm just right now near term bullish on the dollar based on that. And from time to time, I like to just, for those that may be new to the site or my analysis and not familiar with the relationship between the dollar and gold or commodities, we can do it one of two ways. Let's just put in UUP. The UUP is a U.S. dollar, the U.S. dollar ETN. Tracks the U.S. dollar index. And so what I have up here right now is DJP. I can add gold here. You know, I'll put them both there. Add, where's gold? Let's pick a color. Don't have it already, so we're gonna just put in. We'll make it this color here. No, that's not standing out. Let's just make it this bright purple color. Okay, so now it's getting a little bit busy, but you can see the relationship here, or inverse relationship right now. Okay, so in black right here is the U.S. dollar UUP, the dollar index fund. Let me color this up. And so when you see when it's falling, both gold and used DJP I already had here. I'm sorry, I should have said that earlier. DJP is one of those commodity, well-diversified commodity ETFs. It tracks a commodity index. It has gold, oil, agricultural commodities, industrial metals, and it's just showing you here the very clear, unmistakable relationship, inverse relationship between the dollar and commodities as well as gold. Gold is, it also considered a commodity. It's a precious metal and a commodity. And there it is. In an easier way, that chart might be a little busy for the untrained eye. Just use UDN. UDN is the inverse US dollar ETF. So all I'm doing now is flipping the dollar upside down. Again, the dollar here on this chart is the black line, and so this shows you that inverse relationship. So therefore, when this black line's going up, the dollar's falling. And you can see when dollar falls, commodities go up, and when the dollar rises, or UDN, it's very clear, because now I flipped what was an inverse correlation to a positive correlation, and to me that is unmistakable. And I can take away gold or leave gold there. Either way, it's let's just take it away. Well, what did I? Oh, you know what? I messed up, guys. Sorry, that PPLT was platinum, but it's going to show you the same thing here. I put in gold, and you can see the same thing there. It is now a positive correlation. I have them all. Okay, they're not starting at the same point. It's busy when you have a lot of lines, but you can see again, it's just look when one's going up, one's going down. Don't look at the price difference, the difference between the two, because they're on different pricing scales. Look at when one turns, one bottoms, the other goes up. So that's it. I think I made that pretty clear. And therefore, if we get a rally in the dollar, which I just made the case for, it's probably going to put some pressure on gold. Not always, but most often. And the only reason you won't see gold rally when the dollar falls, or vice versa, is when there's an overwhelming bid for gold or demand for gold. In other words, sometimes the dollar can be rallying, which is typically bearish for gold, but yet the demand for gold is very strong, so it overcomes that basic fundamental premise that says when the dollar is falling, a weaker dollar takes more dollars to buy an ounce of gold. And that's why in a vacuum, if you freeze supply and demand, make it equal, it is a perfect correlation between the drop in the dollar or rise and fall in the dollar and the price of gold. And then just same thing, here's that DJP, that well-diversified commodity index. Covered it quite a bit in the last few days, but that's it. It recently hit the top of the price channel, and we recently were pretty overbought. And then we broke the minor trend line, which has put us in correction mode. And, History shows us usually once you break the minor trend lines and get rejected off the top of the channel, ultimately you go down to the bottom of the channel. So this is where I'll be warming up to close any shorts that I might make on precious metals or any select commodities, and there's quite a few out there, and or recycle back into some long positions where, again, and I'll say this over and over, if you're, the downside to trying to game pullbacks of a commodity in an uptrend, or I'm sorry, any asset class, whether it's stocks, bonds, commodities, the benefit is you can sidestep some pretty big losses and even turn it into a gain and get back into your original position. That's what I call micromanaging, a position, even if it's a long-term position. Now, the downside is sometimes in a strong bull run, you think there's going to be more pullback, a bigger pullback, you get out of your positions, and it turns around and takes off and leaves you either forced to buy back in at higher prices or leaves you out of the position. So, yeah, it's up to you, and there's no easy answer for, how to do that, but you obviously just keep an active eye on the charts, and every now and then that happens, but more often than not, I'm able to sidestep the give back in profits and even profit from a pullback trade and then get back in when the time is right. So as of now, based on what I said with the dollar and the euro and everything looking like it's going to bounce, it's just rather hold off on re-entering or adding to any long-term positions in commodities and gold. I mean, here's one, for example, that I shorted the other day is platinum. Platinum futures, PA, Palladium, PL is platinum, PA is palladium. Bearish rising wedge, divergent high, my favorite kind of patterns right here, line up with the dollar. So we had early sell signal there, and then the primary or more significant uptrend line, breakdown back test, and it's stair-stepping lower. And there's one other level I'm actually eyeing, and I should put it here for you, and it's right about here. This is my minimum target, give or take, about 26.84, with the secondary target about 25.33, which I think is probably likely. So the way this works, this is my expectation: come down there, get probably a tradable bounce, maybe not. Either way, once we take that out with conviction, that would open the door for a move down there. So at minimum, I think we're coming down another, well, what is that in percentage terms? Another 3-4% in palladium. And there's your ETF if you don't trade futures. Just nice, clean, bearish rising wedge, divergence on the RSI, and breakdown, also rejection, false breakdown, whipsaw signal above that 272.50-ish. That was that previous major reaction high back here from early 2020. So you have a what do we call a false breakout or a bull trap, whatever you want to call it, a break above that level that failed shortly after, and then you broke the primary trend line, back tested, and then stair-stepping lower. And there's my first and minimum target, 252.85, with a secondary target that I think is pretty likely of, especially if that dollar can really get some traction going, 236. But remember, commodities are in a larger bull market, so the key is if you're going to swing down to 236, no problem. Just periodically lower your stops along the way, and then if and when it gets there, I'll tell you that's a pretty solid support level where a bounce. I mean, bounces are likely on both of these targets, but even more so in this one, it's more solid support. And these cryptos are just trading perfectly to technical analysis. This was that quote unquote big level the other day when we were down here. We hit it, give you an objective time to get out any longs for a bounce, hit it again, another objective shorting op, came close there, and look, and I maintain that I think there's more downside to come, another leg down in the cryptos, Bitcoin and Ethereum. And so far, another rejection. Looks like a little flagging action going on there. So when we go back out, that's a short-term chart. This is only a 5-minute chart, 1 week price action, by the way, in BRR, Bitcoin futures. And I'm sorry, guys, I rifle through these videos, and if I don't mention it on these charts, it's up here. The symbol and my time frame is right there. So if I fail to mention that, but again, big level. And then on the charts, if you use the ETN or ETF type instrument, I keep calling it closed-end fund, I believe, that's GBTC, and that was our, whatever. We I've updated this extensively recently. Hit my second target there where the bounce was likely. We bounced, and although you don't see it here, and again another reason why you use futures, I don't see any, really hardly any, if any, resistance right there on this daily chart of GBTC. But it was beautiful resistance on the futures. Why? Because they're trading around the clock, and you have all those reaction points either way. So that provided you an objective short entry there, or get out of the bounce long, and gave you this target the other day when right before when T2 was hit. Yeah, just before it was actually all the way hit, and that's where we'll probably come down at minimum, and Bitcoin could be a lot more. I mean, this is the biggest bubble that we've had in the financial markets by far since the dot-com bubble. I mean, there's been some other ones, a housing bubble, credit default swaps, all these things that are out there, but this one. So who knows when the big bubble is going to pop, if this is just a correction. But I can tell you, everything I've been talking about for years now on this cryptos, believe me, I wish I would have been an ardent crypto bull years ago. The amount of money to be made was insane, but we're starting to see what I've warned of, and that is government coming after it. Governments, from China to the U.S. U.S. isn't going to go so far as to say they're going to ban it like some other countries, India and whatnot, but they're coming after it tax-wise and other things, and regulatory as well. They're going to eventually, FINRA's going to want to regulate this as a security, and either way, long term, maybe that's good for it, maybe not. I don't know. All I know right now, we're in correction mode, so let's not. And again, based on my read on the charts and everything going on, I think we're coming down to that 2413-ish level, and that's still plenty of meat on that bone. That's a 23% drop. That's Bitcoin, and then, of course, all my other Bitcoin proxies, they're going to go down with it. There's Riot. Still, we've had multiple. It broke my $27 target. That was a price target from way back when. Bounce, 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 bounce. Look at that. I have not touched this line since. Actually, since most recently, February 22nd was the last time. Oh no, that was when it was created. Either way, it's the same level it's been there. I'm trying to see when that was created. But boom, 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 and then so another leg down, and Bitcoin should take this right down to that 1784 next target there. Marathon still headed down to at least that 1615 next target, I think, and then ultimately maybe this trend line, and likely this trend line in 1037. And then finally Ethereum ETCB. Was that the one? ETCG. Gosh, all these symbols here going spin around in my head. ETCG. Yeah, that's right. I just typed it in wrong. There it is. That's it. Gave you a big sell signal the other day when it broke the primary uptrend line right there. Had a kickback rally, and still think it's going lower at minimum down to that $31 target. That gives us another 23-24% downside, and there could be quite a bit more. So if you're short, the cryptos, trail stops down. If you're long, just don't underestimate how far and how fast they can fall. That's about it. Let's keep this one relatively short. Those are some of the big things I'm watching. Like I said, these cryptos have been printing money lately, just trading so well off the technicals. Gold's been everything. I just covered. Gold, like I said, getting odds for coming up for a correction. As well as other commodities as well. Dollar looking good for a bounce. Pure play, of course, it's dollar ETN, or you can go short the euro, and there's all kinds of inverse ETNs out there as well. So you trade these however you want. If you don't want to short gold, but you think the dollar's going to bounce, that's what I'm trying to get at. You don't have to. You can just go long UUP. Or dollar futures. Dollar futures, like all futures, are leveraged. You're not gonna get rich quick trading UUP, because the dollar doesn't go up and down much in percentage terms. Now you can, it's just like trading treasury bonds. You use a higher position size. This rally, if you took this breakout of this bullish falling wedge right here, and you rode that first leg up, it was only 1.9%. So how do you make money on a 1.9% gain? or if we're going to have, let's say, a rally in the dollar right now, back to that level, 24.74, 2% gain. Well, you put a lot more into it than you do into, a regular trade like QQQ or Apple or gold or something like that. And likewise, because you're putting a much bigger position size, instead of your usual $10,000 size, whatever your number is, you could do 20, 30, 40, and then you just use a stop loss that's in line with your price target, not in line 1-to-1, about 3-to-1. You want to risk at least, risk no more than $1 to make at least $3 or so. And so, I could see the dollar heading up possibly on this. If we get a rally up here at about 25.15, I probably should tweak that target. Yeah, let me give you a target zone. Second target zone right there, 25.15 or so. And that would be a almost 4% move in the dollar. But you do that in DX dollar futures because they're leveraged. Yeah, you're doing a lot, putting a lot more money in your pocket. But again, it equals out, because when you buy a leverage instrument, you're at risk that much on the downside. So, all right, hopefully that makes sense. I say this because I know a lot of you guys don't have either the ability to trade futures with a futures account, the knowledge. There's some nuances there you need to understand about trading them, or the capital requirements. And so that's why I try to share both these ETF and ETN trade ideas along with the futures. All right, let's end it here and get the video out to you guys. If I see anything else pops up on my radar today, I'll do another video. Otherwise, I may cut out early today because it's Friday. This has been Randy Finney with Right Side of the Chart. Have a great weekend.